What on earth is going on with Ether.fi? The Ethfi token is climbing from one high to the next. The usage of the platform is also increasing. The question is this current rally justified? Let's have a look at the on-chain metrics. Let's have a look at the data most people are not considering to try to figure out how much higher this rally can go. So this is the current situation. We are currently at $1.39. We are up 37% today and we almost 3x'd this month. Ether.fi is a liquid staking platform. It's quite popular. It's got 192,000 followers on Twitter. There are 108,000 holders of the token on the Ethereum chain, and centralized exchanges own quite a large chunk of the supply as well. Here's the Binance hot wallet. Now, at first sight, it looks like the usage of the platform is quite fluctuating. What we see here on the right is the total value locked of the protocol. So that currently stands at $7 billion. But this is the total value locked measured in US dollars. Now, most of that total value locked is Ethereum. So let's look at that capital in ETH. There is just constant growth. So over time, it looks like more and more Ethereum gets staked on the platform. There are way more inflows than outflows. And this pretty much mirrors the overall trend of Ethereum staking. So across all protocols, we do see Ethereum getting staked more and more. In the recent months, we have seen some kind of a plateau, but at least things are not going down. So people are not unstaking their Ethereum in order to sell it. I don't think this will happen anytime soon because Ethereum recently is outperforming the rest of the market quite a bit. Now, with all of that positive data, how does then this make sense? So this is the Ether.fi token price measured in Ethereum, not measured in US dollars, but relative to ETH, because that's in the end what counts, right? The overall crypto market goes up and down in sync, but the idiosyncratic movements can be seen in relative valuation chart, like with this one relative to wrapped Ethereum. So we've seen a long-term underperformance. From the all-time high to the current price, it's an underperformance of 76%. From the all-time high to the all-time bottom, it's an underperformance of 88%. So what's going on? Here is what's going on. The typical thing that happens with most altcoins. Over time, supply unlocks to the investors, to the team, and those unlocked tokens tend to get sold off. So there have been some user airdrops, and the first unlock of investors and the team happened on March of this year. Now, the underperformance happened way earlier than that. How is that possible? Potentially through over-the-counter deals. So sometimes team members sell their vesting allocation to other investors for a discount in order to exit the token a bit earlier. And so whatever listed as the official unlocks might actually move to the left. That's probably what happened with the Ether.fi token as well. And so the current rally is within regular parameters, right? Within this downward trend, we are just now at the top end of the trading range. But who's actually buying here and who's profiting from this rally? Why is the price up? Are there suddenly so many retail investors buying in? The way I'm asking, you can probably tell that's probably not what's going on. And here is why. Check out the number of new users versus returning users per day. There was a spike that happened on the 11th of May, but in general, the number of returning users is much larger than the number of new users on any day. Now have a look at this. This is the number of buyers and sellers per day. And sometimes we've got news around the token. When the trading volume goes up, when the number of buyers and sellers goes up, the ratio of buyers to sellers tends to be somewhat stable over time. But here's the actual chart I want to show. The number of retail investors versus whale investors. And the way we make this distinction is by looking at minimum holding thresholds. So to be counted for the chart on the left, a wallet has to hold at least 1,000 Ethfi tokens. So at the current price, that's roughly $1,390. To be counted for the chart in the middle, it's a 10x in minimum holding, so that's more than $10,000, and on the right another 10x, so more than $100,000. A lot of new whales entered the token in the middle of April of this year. Now that was over here, pretty much at the historical bottom. Since then, the price almost doubled. So some whales are making bank here. Small retail has stopped accumulating for the last 1.5 years. Yes, there are some medium-sized retail investors that did get in at the beginning of February of this year, but that timing hasn't been as good. So we tend to see this time and time again. The whales tend to make the better calls. The whales are whales for a reason, right? They have all of that capital because they did the right things in the past. They probably know more than the average person. They might either have more skills to research, or they might simply just be plain insiders. Now there's a secondary story happening. Have a look at the trading volume. Most of trading volume happens on the centralized exchange, so that's here Binance, but that's the spot trading volume. We've also got the bets on the price, and there's way more trading volume on the perpetual futures now. So almost $500 million worth of value changed hands on Binance alone in the last 24 hours. So this is really where the price discovery is happening. It's not in decentralized finance where we only saw trading volume of 1.4 million in the last 24 hours. And so I want to draw your attention on something here. It seems like the recent rally happened in two steps. One very quick rally, then a retracement, then another rally. And this tends to be a pattern of short squeezes. So many people potentially bet on falling prices around here, and then the market makers manipulated the price upwards to short liquidate those people. Then again, some shorts entered the market, and again, another liquidation wave. Now let's see if that makes sense. So what we've got over here is the open interest rated funding rate. So this is how much the longs have to pay the shorts. And when this is very negative, it's very expensive to bet on falling prices. So many people are betting on falling prices at that point. And this is then when we got our secondary rally. So in yellow, we see the price, the spot price of Ethfi, and in red and green, how expensive it is to bet on rising or falling prices. Now currently, it's not that expensive to bet on falling prices. So probably we are not going to see another short squeeze that quickly. But just have a look at how important those bets on the price are. This is now the open interest in green, and in yellow we see the Ether.fi price. And again, when there's a lot of open interest, the price tends to go up. When there's less bets on the price tends to go down. And currently the rally is very much in line with how many bets there are on the price. This is a leverage-driven rally. And so here are the liquidations I was talking about. This first short squeeze generated a lot of liquidations. The second rally, less so. So the short liquidations are in red, the long liquidations are in green, and things seem to have slowed down a bit. And so what I'm expecting is that the price will actually rather trend downwards now. Now I'm waiting for the turnaround. I'm waiting for a few days, potentially weeks, for the price to go sideways so that nobody cares about Ether.fi anymore. And then I'm considering to enter a short so that then the price continues to bleed. Because long term, it likely will, because the tokenomics are not great, the supply increases over time, and those insider tokens will continue to put selling pressure on the price, despite the positive development of the protocol. The protocol is getting used, but the tokenomics are simply too bad. And on top of that, we've got all the leverage now in the price. So we are likely not going to stay at those levels. We are not going to go to $5 or $10 most likely. I'm just waiting for the price to stabilize for a while. And then when we are maybe at $1.20, $1.10, when things have calmed down, then I'm likely entering a short. But of course, a relative valuation short. So not a naked one, but one that's also hedged versus the general market. That's short Ethfi and long something like the ETH token itself. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. What we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now, I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bets on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently 125 US dollars per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.